Morning, dear students. Today we are discussing cost sheet. What is cost sheet? The main aim of cost sheet is to ascertain the profit of a particular product. So, what is cost sheet? It is a statement prepared at given intervals of time, which provides information regarding elements of cost incurred in manufacturing a product and also discloses the total cost as well as the cost per unit of a particular product. If it is desired to compare costing results of a particular period with any of the preceding period, comparative columns can be provided in the cost sheet. So, what is the aim of the preparation of cost sheet? The cost sheet is prepared to ascertain cost of product or job or operations, to give quotations, or to determine tender price for supply of goods or providing service. So the purpose of preparing the cost sheet is we can ascertain the cost of a product or cost of a job or cost of operations, and also we can prepare the quotations or we can determine the tender price for supply of goods or supply of or providing service. The cost sheet is divided into the direct cost. The total of direct cost is prime cost. The second part consists of overheads. It is divided into factory overheads, office and administration overheads, and selling and distribution overheads. So, what is prime cost? It is the total of direct cost of production, including direct raw materials and labor. Indirect costs such as utilities, manager salaries, and office cost, etc., are not included in prime cost. Business need to calculate the prime cost of each product manufactured to ensure they are generating a profit. So this is prime cost. Prime cost consists only the direct material and direct material, direct labor, and direct expenses. And what is factory overhead? Overhead means all the indirect cost is known as overheads. Here the first overhead is factory overhead. It is also known as manufacturing overhead. So the indirect part of cost sheet is factory overhead. It is associated with the factory overheads is associated with the expenses related to running a factory. That is factory rent, factory lighting, factory electricity, factory supervisor salary, cleaning, etc. So these expenses comes under factory overheads. The next overhead is office and administration overheads. It is also indirect expenses incurred for the general management which supports a business. The salaries of the office staff, rent for office building, utilities, insurance, office supplies, professional services like accounting or legal fees, etc., comes under office and administration expenses. These costs are essential for the overall operation of the company, but are not directly tied to the creation of a specific product or service and are therefore allocated to cost of production or other functions. The third part is, and the next overhead is of selling and distribution overheads. These are also indirect cost in accounting. So these are the expenses incurred on the selling and distribution of the products. Selling or orders for placing orders, distribution overheads covers the cost of making products available to the customer from the packed product to the point of delivery. So examples: advertising, salesman salaries, packaging, transportation, traveling expenses, marketing expenses, commission, etc. comes under selling and distribution overheads. Now we can move on to the format of cost sheet. So the first part is the direct cost part, and the second, third, fourth part are indirect part. The first part is direct cost. We only include the direct expenses under this first part. Direct materials consumed. How we calculate the direct materials consumed? Opening stock of raw materials, add purchases. If there is any carriage inward, you have to add that with the purchases. Less closing stock of raw materials. If there is any scrap value, you have to deduct that sale of scrap from the closing stock, from the direct material. Then you have to add direct labor, direct expenses, you get the prime cost. The second part is indirect cost. Indirect cost are commonly known as overheads. The first overhead is factory overhead. Factory overheads comes under that factory rent, factory lighting, factory workman salary, factory supervisor salary, general factory expenses, all comes under factory overheads. Less sale of scrap, and you get gross factory cost. After that, you get, if there is any work in progress adjustment, you have to add the opening work in progress in this factory overheads, and closing work in progress, you have to deduct the closing work in progress. You get factory cost or works cost. The next part is, second overhead is office and administration overheads. You get cost of production. So office and administration overheads consists of office salaries, office rent, supervisor salary, general expenses, etc. comes under office and administration expenses. All the expenses related with the office and administration comes under office and administration overheads. Then here is one stock adjustment. That stock adjustment is a finished goods stock adjustment. Here you have to add opening stock of finished goods and deduct closing stock of finished goods. You get cost of goods sold. Then the last overhead is selling and distribution overheads. Selling and distribution overheads, selling and distribution related expenses comes under this. Here, salesman salary, marketing manager salary, distribution expenses, promotion expenses, advertising expenses comes under selling and distribution overheads. Travelers commission, etc. comes under this selling and distribution overheads. After that, you get cost of sales. Then you add profit, you get the sales. So the major results of this cost sheet are prime cost. After the direct expenses part, you get the result as prime cost. Then you add factory overheads. If there is any work in progress adjustment, you have to add opening work in progress and you have to deduct the closing work in progress. You get the result as works cost or factory cost. The next part is office and administration overheads. All the office and administration expenses you have to add. Then you get cost of production. If there is any finished goods adjustments, you have to add opening stock of finished goods and deduct closing stock of finished goods. You get cost of goods sold. The last overhead is selling and distribution overhead. All the selling and distribution overheads you have to add it. You get cost of sales. Then the difference between cost of sales and sales is the profit. Sometimes the ratio is given. Suppose the profit is 20% on sales. That means 1/5 on sales. At that time, you know the cost of goods sold or cost of sales. You have to find 1/4 on cost. You get profit. If 20% on cost is given, profit is treated as 20% on cost. At that time, you have to find cost of production, cost of sales into 20%, you get the profit. Then add profit and cost of sales, you get the sales. Thank you.